Good morning, good afternoon, good evening, and good night, depending on where in the world you are joining me from. Me, I am Illuminati, and this is the Crypto and Cognac podcast show, as always, live every Thursday, 7 p.m. Atlantic Standard Time, sharp right here on YouTube. I'm here, you're here, Stevie in the comments. Hennessy in the glass. So you know we do it, right? So before we get started, episode 24, season 7 of the podcast. Pour yourself a nice little drink and let's chop it up, right? Today, we are talking about the war of ETFs, the war against ETFs, the ETF war against crypto. What am I talking about? Right? I have always been someone, you guys, if you've been here any time before any of the previous episodes, you know that I always say that adoption is inevitable. Now, what does that mean? How does that look? I think initially when crypto was created, we expected that adoption to look in a particular way. Mass retail adoption, at least that's what we saw in every previous cycle. However, with great power comes great responsibility, and people have been asking for institutional players to enter the market to provide some structure, some regulatory clarity, um, some calm to the volatility that we all know crypto to be. And the interesting thing or the unfortunate thing, I don't know how you wanna look at it, but the facts are that that is a double-edged sword, right? Because crypto was created in its initial incarnation to run parallel at times in its most optimistic expression. Some people who are a little bit more hardline in terms of their expectation and understanding of what this space needs to look like. Some people believe that crypto is supposed to replace the traditional global financial infrastructure altogether. But what we've been seeing is that more and more institutional players have been coming into this space and what is the word? Cannibalizing the decentralized nature of this beast called cryptocurrency. So today, episode 24, season 7 of the podcast, we are going to be talking about it a bit, right? But first and foremost, cheers, right? Second, and just as important, you see this thing in the glass here? You see that block of ice? Right. That is how we deliver information here. The ICE rule: information, conversation, education, a little bit of entertainment, but never financial advice. Me, I'm not a financial advisor. This is not a financial advisory podcast. So no matter what you hear here this evening, any previous evening gone by, any evening to come, understand one thing: all for information, conversation, and entertainment. Never financial advice. Do your own research as always. Yeah. So, like I said, today we're talking about how Wall Street has seemingly infiltrated Bitcoin as compared to what our expectations were in terms of Bitcoin infiltrating the traditional financial services infrastructure. What does that mean? So over the last couple of weeks, we have seen something very important happen. Wall Street has not just been entering crypto, they seem to be escalating their colonization. That's a good word? Maybe it is. Of this space, right? So what we saw in the last couple of weeks, we saw Goldman Sachs file for its first Bitcoin ETF. Interestingly, a spot Bitcoin ETF, but rather a premium income Bitcoin ETF, which basically operates as a platform for buying other ETFs and earning income over a structured investment program. So not holding the underlying asset. And then we saw Morgan Stanley, one of the largest banks in the world, launch its own spot Bitcoin ETF, right? And become one of the first major banks in the US primarily to not just offer Bitcoin, but also to distribute it to offer custodial access to Bitcoin via an ETF. And that has been doing amazingly. The CEO has said that it has been their best performing launch of an ETF in their history, which speaks volume. It speaks to the fact that there is still clearly a lot of demand out there for Bitcoin, especially in this framework that is a little bit more familiar to traditional investors, right? Now, why is that important? Because banks have traditionally been gatekeepers, right? They are not product creators necessarily. But what we see now is that in addition to being gatekeepers or by being extending their gatekeeper experiment or experience to Bitcoin, what is happening is that we are seeing more and more people accessing Bitcoin, not with direct exposure, not with self-custody, not with continuing to grow the decentralized nature of the network, but through these ETFs. So what we have is these banks, these investment bankers, these traditional banks becoming significant holders and custodians of BTC, right? Which of itself creates, some concerns, but it moves particularly away from the core tenets of what Bitcoin was supposed to be. So, how do we interpret that? So, at a glance, you might think that one, what we've been hearing based on the fact that the price action has been pretty flat, people have been thinking that Bitcoin ETF momentum has been slowing down. But the reality is that a lot of value is still coming in. The momentum is not slowing. The party is still pumping. We've seen over just the last week, ETFs saw 471 million of inflows in a single day. March recorded 1.3 billion in net inflows, which means that after you subtract the outflows from the inflows, we still experience a net positive position of 1.3 billion. And that was the first positive month for the year. Granted, it's only 3 months in, but still showing a change in direction. What we are also seeing is that despite the plateauing and the sell pressure, we are not actually seeing institutions exiting. What we are seeing is some institutions adjusting their positions in terms of moving from one to another, people moving out of MicroStrategy into their own ETFs, people moving from MicroStrategy to ETFs, and so on. But generally, what we are seeing is that smart money, traditional investors, as they are known, they are not leaving Bitcoin. They are basically saying, you know what, we're going to manage our risk in a particular way. We're going to take control of our investment portfolio directly. And this, I think, has been very different from what we saw in previous cycles, 2021, particularly 2017, where we saw huge amounts of retail mania. And I think some people were expecting, especially in the retail side, people were expecting, especially since we've called for the bear market again, that we would see the types of corrections and cycling out of Bitcoin like we would have seen in previous cycles. So the people who are actually exiting are those retail holders. But as we've seen, we've not seen the type of capitulation in the market that we've come to expect or understand for this particular time in the market. Again, I've said it here before, I am still not all in yet until we get somewhere around November. I don't know what is going to happen in November, but even though history may not repeat itself, it tends to rhyme. And the November 2022 was the bottom of that cycle. November 2018 was the bottom of that cycle. November 2014 was the bottom of that cycle. So me, I waited until November 2026, right? But I think what we actually seen is a full-scale institutional land grab as it relates to Bitcoin adoption. We're seeing asset managers coming in, people like BlackRock and Fidelity. We're seeing investment banks coming in, people like Goldman Sachs and Morgan Stanley. And we're seeing ETFs dominating, and we are seeing innovation around the Bitcoin ETF space. We are also seeing somewhat of a fee war. So Morgan Stanley would have entered the market with a significantly reduced fee structure, obviously seeking to undercut the market and establish key market share early on. We know that Morgan Stanley currently, they have over 1.9 trillion in assets under management, and they have a massive advisor network. So what does that mean is that we are possibly going to see the greatest period of retail adoption in Bitcoin's history. But interestingly enough, it is not going to be in the way that we've seen retail adoption previously, because all of this is going to come through these banks like Morgan Stanley, who will continue to be the holders of that BTC. And, you know, I have some trust issues around what is going to be declared, and, you know, what does 10 years from now look like? Are these guys really holding the amount of BTC that they are representing in those spot ETFs? Do we start seeing a little bit of dilution starting to take root in that space? But I think ultimately, as someone who has been in this space for a while, I am cautiously excited, but I'm also very, very nervous about what this continued structure of institutional adoption looks like, what it does for the industry. All of us want to see less downside volatility. Of course, we all want to see that upside volatility. We want to see that growth. We want to see that to the moon. We want to see our portfolios grow. I think the periods of 10x and 15x, 20x, especially in the bigger cryptos like BTC in a cycle, I don't think we're going to see those in the coming cycles. I think this last cycle we would have saw 8x. I don't expect to see a 10x in BTC again in a single cycle, maybe a 5x. But this is what happens when we see adoption take place. But there still might be opportunities out there in the greater crypto space. So you all hit me up. Let me know what your all thoughts are. What do you all think about this institutional adoption? Is Wall Street waging war on all streets? Can we survive it? Will the key tenants and ethos of Bitcoin, blockchain, crypto be able to resist against this institutional adoption, or are we going to just see institutions continue to dominate the Bitcoin asset class like it has all the other major asset class, whether it be gold, whether it be mortgages, whether it be property, whether it be silver? You all tell me what you expect. But like I've said before, like I'm going to say again, like we're seeing right now, adoption is inevitable. So if you can, do like me. Every month, take a little dollar and buy some BTC, right? Dollar cost average. Again, not financial advice, right? Right, Stevie? Guys, that's my time. Have a blessed one. Illuminati, OUT, out, right? Have a good one, guys.